Well, good afternoon, everyone. Thank you so much for joining us. My name is Elaine Coleman, and I'm the Alliance Manager here at Avalara. I work very closely with the team at Implementation Specialists, and especially Judy and Chelsea. So I want to just welcome you to the webinar today. As you can see on my slide, we are going to be covering sales tax compliance for dummies. And I want to point out a couple of things. First of all, just because it's a dummies book, it does not imply that anyone here that have joined this webinar is that we're calling you a dummy. What I do want to point out is that we all understand that sales tax is extremely complex. And so we want to walk through that with you and give you some tips and tricks and just talk a little bit about why sales tax is so complex. All right, does that sound good? Hopefully everybody's ready to go. I'm going to go ahead and jump in quick and just walk through the agenda that we're going to cover today. First of all, we're going to talk a little bit about why sales tax is important. Then we'll cover the basics of sales tax, the nexus and what that all means and what nexus creating activities might be, why that's important for you to know about these things. We're then going to jump into really what we want to focus on today, and it's the 5 basic steps for managing sales tax. We'll walk through everything that you're probably dealing with today, maybe some things that are new to you, and give you some pointers on that as well. And then finally, we'll talk about how automating sales tax compliance can help you and help your organization. So with that, I neglected to say thank you so much for implementation specialists inviting us to present to you. So I do want to point that out. They're a very strong partner of ours, and we love working with them. And I've probably met some of you at their events as well. So let's go ahead and dive right into the first topic on why sales tax matters. Well, I'm a very visual person, so I want to show you states rely on sales tax revenue. And as you can see in this pie chart, a majority of the state's revenue comes from sales tax. It's almost 50%. That's a huge part of the state's revenue. And in fact, 27 states receive a majority of their annual revenue from sales and excise tax. So that's a lot of states that really rely heavily on sales and use tax. And so because of this, it's a very focused effort within states to look at what products and services are taxed. Are the tax revenues coming in every month, quarter, year, and that's how they balance their budget. So most of you probably know that, but you may not have known the percentage that it makes up. The other reason why sales tax is so important is it's a statutory requirement. This is not a maybe I want to collect and remit and maybe I don't want to or I don't feel like doing it. It's a requirement and it needs to be done. States have invested a lot of energy and revenue on hiring auditors as well. And they're making sure that when sales tax is supposed to be remitted, that they're finding people who may have missed submitting their sales tax. The other thing is because of the way the United States was founded, it's on state rights and sales tax is in a constant flux. Each state, each municipality, each jurisdiction can be changing their tax rules, their taxability, anything can be in a constant flux. And so something that, can make that challenging for you is, are you able to keep track of all of the changes that are happening within the states that you're selling into? And then finally, probably one of the biggest things is sales tax tracking and compliance is a non-revenue generating activity for your organizations. So doing it right is great, doing it wrong is not good, but it's not bringing revenue into your organization and it's not helping you grow your business. So those are some of the challenges that I recognize you're facing today. So, how can we help you do things better? And we'll talk about that as we move along in the presentation. So one thing that a lot of people are really watching today is sales tax nexus. So let's jump in and just talk a little bit about what is nexus and all of the different nuances of nexus. So first of all, what is it? Well, it's basically that relationship between a state or a taxing jurisdiction and an entity such as your business. And nexus is created when that relationship happens. And so when you look at that, it could be physical nexus. So you could have a physical presence in a state, whether it be your office building or a warehouse or a remote employee. When that connection is established within that taxing jurisdiction, then you're required to collect and remit sales tax. And until that's collected, there is no requirement for you to do so. Now, there's various types of nexus, as you can see here listed on the screen. So I talked about physical. There's click-through nexus, affiliate nexus, marketplace nexus, as you can see, some of the e-commerce types of nexus. But then there's something new that's happened within a couple of years, in the past 2 years, and that's economic nexus. And I want to jump into to the next slide to talk about what makes economic nexus laws so complicated. With physical presence, it's pretty clear. You have a physical location, you have that physical presence in a state. But with economic nexus laws, it's complex for a few reasons. And this is a really, really busy slide here, but it shows you the variations within the states. You can have a state that has some thresholds, economic thresholds, that is just flat out $100,000 in sales, for example, in North Dakota. But then you go over to the eastern side of the state, and it's a threshold of $250,000 in sales and 200 transactions. Then you go in the middle of the United States, in Kansas, you sell one thing into the state and you've hit that economic threshold. So the point here is that it's complicated in figuring out where you have nexus, if you've hit a threshold, what those thresholds are. Recently, just today, I saw that Tennessee has passed a law that they're changing their threshold. They're moving it from, I believe it was 250,000 in sales down to 100,000 in sales. That's coming into place in October. And so not only do states have these laws, but they're changing constantly. Now, the other thing that you have to look at is how they look at the sales. So economic nexus is for the remote selling, right? And it's been in place for about 2 years. But the question is, are they looking at the current year, or have they looked at the preceding calendar year? And what are the laws within each state? Every state's going to be a little bit different. So some states will review your prior year's sales and determine if there was economic nexus created in that prior year. Now you want to pay attention as well to the laws in the states on gross sales. So for those thresholds, you could potentially work with a lot of tax exempt organizations. Maybe your total sales are a majority tax exempt. But if there happens to be 1 or 2 clients that are customers that are not tax exempt, and your gross sales hits that economic nexus threshold, you could still be liable to collect and remit that amount of sales tax. So some things to think about when looking at economic nexus is, how many states am I currently selling into? Do I have physical presence in those states? If not, if I'm selling into those states, I could be achieving some of these economic nexus thresholds. And how complex are these multiple states? Typically, we look at if there's 3 or more states that you're selling into and you don't have physical presence within those states, you may have some economic nexus liabilities, and it could create a more complex strategy for you. So you might want to consider taking a look at, do I automate? Do I do things manually? Maybe I should make some changes. So with that, I went a little bit too fast. We're going to walk through these 5 steps for managing sales tax. And the things that you need to know, the things that those steps are knowing where you must collect and remit sales tax, and we talked a little bit about that before. Step 2 is registering to collect and remit sales tax. So we'll talk through the things that you need to think about there. Calculating the correct amount of sales tax. I talked about the exemption certificates a little bit. We'll dive a little bit deeper into there. And then finally, step 5, remitting the sales tax to the taxing authorities. Now this overview, just to mention, is going to be very high level. It's meant to be 100 level overview. So if we have some questions that you want to dig a little bit deeper, if we have time at the end, we can go into those questions. If not, I can make sure that you're set up with one of our sales execs to dig a little bit deeper on these steps and where you may have additional questions. So let's talk about knowing where you need to collect and remit sales tax. Now this builds on the section where we talked about nexus, and you always want to be aware of what business activities are going on and where, how much sales you're making in each state, and the laws that are changing. You also need to take a look at where you've hit or are looking to hit an economic threshold. So this is going to help make sure that you're ready to collect sales tax once you need to do so. So being aware of that is very, very important. So do you know where you're at currently? Do you know where your business is growing? Do you know if you've met some of those thresholds in those states? And if not, something to think about is working with us to do a nexus study to really dig into where has my business happened, where are we looking to expand. You can certainly work with Avalara on that, or if you have a local CPA firm, they can help you do the nexus study as well. So once you've determined where you're selling into, then you need to ensure that you're registered properly to collect and remit sales tax. So there's some steps that you need to do in order to collect and remit tax in states. Every state's a little bit different, but for the most part, you need to be registered in that state, and each state, again, registered separately. Some states make you register with the Secretary of State to get a business license and then get a sales tax license. And there's some information that you have to share with them, and we've listed that here as well. Some of that information goes through a personal identification verification, and they'll look at multiple people with your organization. And really this is done to add that personal accountability to the filings and payments. And it's important that you know what each state requires in order to register for collecting and remitting those sales tax that you've collected. Now, something to think about, you might be thinking, gosh, she mentioned some things, and I could have potentially hit some thresholds last year that I didn't realize. So if you think that you've had a prior obligation and you haven't taken the right steps, we can certainly help you with that. There can be some things that you could do for backfiling, or certainly participating in a voluntary disclosure agreement. And that's going directly to the state to say, hey, I didn't realize this, but I have some liabilities on the table that we need to work on so that I can, get compliant and make sure that I'm whole with the state. And Avalara can certainly help you do that. We've helped a lot of companies through that process, but that is something very important that when you may have registered, but if you realize, I found some mistakes, we can help you get whole with those states. So to recap, when you need to register to collect tax, determine where you need to register first. So which states. Check if there's additional things that you need to do, like the VDA, like the things we talked about before, and then gather all of the details and get registered, get the permits, the licensing, anything you need. And then you can start filing and collecting and working with the states to make them happy so that auditors aren't coming knocking on your door. And Avalara can certainly help you handle the licensing and registrations if you need some assistance with that. So now what a lot of people think is the easiest part is calculating the correct sales tax amount. So, a lot of us just think, hey, there's flat rates. You know, we all know in North Dakota here in Fargo, where I live, you know, sales tax is 7.5%. Pretty easy, right? Actually, it's way more challenging than we all think. Some of you are probably shaking your heads right now saying, yes, this is a lot more challenging than it seems. And the reason being is listed here. You can all read, but there's over 12,000 taxing jurisdictions in the United States alone. And the reason, you know, that's a lot, but the reason it's even more challenging is that every jurisdiction gets to create their own rates and product taxability rules. They're not always based on zip codes either. There's an example, I could pull up a picture, I don't have it handy, but in Colorado, we have a really nice little picture that shows a zip code. And then you drill into that zip code and you can see a minimum of 5 to 6 taxing jurisdictions within the zip code. They can overlap, they can all be different. So if you just use zip code tax rates, you could potentially be using the wrong rate. When an audit happens, you could get dinged on that. So we want to make sure that you're looking at things, not only getting the right tax rates, but making sure that when you're in, you know, down to the jurisdictional codes, that you're getting that exactly the right rates to use. The other thing that I find is interesting, and if you look on the right-hand side of the screen here, are the product taxability rules. And for those of you that know me or have met me, you probably know that I have a sweet tooth. And I look at the example here, the candy bars in Indiana, and it's also true in Minnesota for those of you who live in Minnesota, but there's some taxability rules within these candy bars. So I go to a store and I buy a Snickers and a Kit Kat and a Twix because I can't decide which one I'm hungry for, so I'm just gonna have them all on hand. Snickers is the only one that's taxable. Now, if you guys wanna send a guess real quick in the chat on why Snickers would be taxable and Kit Kat and Twix is not. I'll send you a little Avalara goodie. I've got some umbrellas, I've got some fun sunglasses, I've got a few things I can send your way. So if you wanna guess, go ahead and do that. But this is just an example of product taxability laws that, you know, a state may have. In Indiana, this is this way, where, you know, if you were to go buy the same exact items in a different state, they may be taxable, they may not be. It just depends on the taxability rules within those states and the products. So I'm trying to see if anybody has guessed. Jessica, can you see any guesses? Oh, I see one. Contains peanuts.
Yeah, that's the only one I see.
That's the only
one.
That's
a great
okay.
guess.
It is a really good guess. You're on the right path. So Chad, since you put the guess in, I'll send you a prize anyway, but you want to know what the answer is? It's the flour content. A Kit Kat and Twix is considered a grocery item because of the flour content. So isn't that crazy? And we all probably know, or maybe you don't know, but grocery items usually are not taxable. So it's interesting on keeping track of that. So then the question that you want to pose to yourself, is this something that I want to keep track of and try to keep track in all of the different states that I sell into, all of the laws, all of the changes? Or do I want to have someone else who has, you know, hundreds of people following all of these rules, updating these real time in the cloud, making sure that I'm compliant? So that's kind of the reasoning you got to put in your head on, is this something I want to do, or do I want to let somebody else do this so that I can grow my business where I need to grow it? But thanks for the guess. You'll get a prize anyway, but it's crazy, right? So let's go ahead and just talk about the next steps on tax calculating. So a couple of things that you want to think about. Be familiar with the variables that make an accurate tax rate. Is this, again, something that you want to track? Make sure that you can quickly and easily charge the correct rates. And don't forget, some states look at sourcing rules. So they take into account the bill to, ship to, sold to address when calculating tax and determining which jurisdiction needs to be paid. So to add complexities to this, it isn't always product taxability. It could be the way it's shipped or billed to or sold to or that kind of thing. So it's crazy, the things that you as an organization need to think about in order to be compliant with the state. And so I would recommend taking a look at our AvaTax product to see if this is something that you would want to do to automate the system to make your life easier, and again, help you focus on what you do best, and that's growing your business in where you want to grow it. All right, so a couple of steps left that we're going to talk about today. Tracking and managing exempt sales. Now, I touched on this very, very briefly when we were talking about Nexus, but some of you out there may work with businesses who are tax exempt. There's going to be lots of different reasons why one of your customers could be exempt, whether it's a nonprofit, a government reseller, a hospital, a contractor. There's all different reasons, and every state will have different reasons for a company to achieve a tax exempt status. And so if you as a seller, if you don't charge that sales tax on a purchase when you typically would, you need to have an exemption certificate to show why you didn't charge that tax. So the state will consider, if you don't have that certificate on hand, you're liable for collecting tax. Even if that company legitimately is a tax exempt organization, if you don't have that certificate on hand to show that, hey, we didn't need to charge them tax, the state will still say you're liable for that. The other thing that makes it difficult about tracking and managing those exempt sales is every state could have a different exemption certificate. They could have different expiration dates. And the question is, are you familiar enough with those requirements from the states that you can collect those exemption certificates properly and know when they expire, and renew at the proper time? So some things to think about there. So think about how often you handle exempt sales. And if this step applies to you, and if it doesn't, that's fine. You can just not listen to me for a couple of seconds. But then take a look at how many times do you need to collect the certificates, validate them, and where do you store them? Are they easily accessible so that you can prove why you didn't collect tax? Now, the other thing to think about, if you've had some changes in your company name, or if you've done an acquisition or done any changes, you may need to get all new exemption certificates from your clients. So just something to think about. With Avalara Cert Capture, this can be fully automated and take a lot of that burden off your plate as well. Now, for what the states love, the last step is remitting the sales tax to the right taxing authority. So once you've collected all that sales tax, what do you do with it? Well, you need to submit the return, and you need to send it to all the proper channels within the state, within the jurisdictions. It's going to go, down to county and city tax. Every jurisdiction, every state, every city could potentially have different requirements, different forms. So for example, most all states have online filing, right? But not all jurisdictions do. So do you know when to send in a paper form versus when to do online filing? And then if you make a little mistake and you don't file on time, there are some places that make you file a paper return in addition to an online form. So again, every state has their own form, their own due dates. So when filing returns, you want to make sure that you're keeping track of all of the right forms, the dates, filing frequencies. Do you know, is it monthly? Is it quarterly, semi-annually, annually? And then sometimes there's even prepayments involved. So understanding when that is a requirement, and just keeping track of all of that. So do you have an easy way to do that? Or is this something that you're looking at, getting some assistance from? And so with Avalara Returns, all of this can be done for you. We simply send a report that you approve, and we can take care of that for you. Okay, so I have been flying through this. We only have a couple of minutes left, and I have a little bit more to cover. So this is the 5 steps for managing sales tax along with Avalara products that we'd recommend. So I want to talk really quick about automating tax compliance, what it looks like, give you that visual of the steps in the process. So I talked a little bit about AvaTax. That's our tax calculation engine. It's a cloud-based solution integrating completely with ERP, point of sale systems. So at the point in your business process when taxes are needed, AvaTax takes care of the calculations. If you work with a lot of exemption certificates and you're using CertCapture, it will also talk with CertCapture and ensure that it's not taxing when it shouldn't. The other thing with CertCapture, again, mention this in the steps, but CertCapture will take care of managing the certificates. It will notify your customer if it's about to expire. It'll ensure that there's an easy clickable link that certificates can be updated, and everything is stored in the cloud. And then finally, I touched on returns. Using the returns management service, you will be able to, again, get that liability report, you approve that report, everything's taken care of for you. So now if automating isn't enough, we are also one of 5 certified service providers through the Streamlined Sales Tax initiative. And this allows qualifying businesses to get some of these things that we just covered for free. So these 24 states got together and said, we're going to make it easier for companies to do business with us. We want a uniform definitions, product taxability rules. And so when I said that the taxing rules for the candy bar was the same in Indiana and Minnesota, you can see that here, that they're all part of SST. So those laws and rules are all the same in these states, but they're trying to figure out a way, hey, let's make it easier for you to do business with us. And they will actually pay Avalara on behalf of you to have this automated and compliant. We went through a lot of testing and certification to achieve that status. Very proud to be able to offer this to you. So talk with us if you're interested in that. So before I wrap up, I just want to share that we have 25,000 plus customers using Avalara. We have great partners like implementation specialists that work with us and recommend products like this to you to help your day be easier by automating some of these systems that you currently might do manually. We're here to ensure that things are accurate, efficient, and integrated. And so we have over 700 integrations, working with Microsoft, working with lots of different products. So whatever you might be using today, we most likely have a pre-built integration available for you to use. Now, finally, a couple of things. For thanking you for joining us today. You will be getting a Starbucks card from us because this is kind of a coffee talk, and you'll be getting that in the email. But I also wanted to offer you this free sales tax risk assessment. If you're thinking, I think I have some liabilities in states, I think I've met some of the thresholds or I'm coming upon the thresholds, you can go to our website. There's a link here on the slide. We'll send this out to you as well. But you can take a risk assessment to see where you may have some liability for economic nexus. And it can show you where you're approaching and where you may need to take some action with the states. And I know I've talked really fast, but I just want to thank you so much for joining us today. I thank Judy and the team at Implementation Specialists for asking us to talk with you today. And I do want to offer the Sales and Use Tax Compliance for Dummies book that you can download. It's a great ebook. It'll go a little bit more in depth on the things we covered today. And please, if you have any questions, enter them in the chat, or certainly send me an email, talk to Judy. We can get you connected with the right folks here at Avalara to ensure that you have help. So with that, I am like right on time. Jessica, are there any questions in the queue for me?
So it looks like we have one question that came in so far.
All right.
And then we'll give it a couple more minutes to see if we get any more. But the one question that we have is, does physical presence still factor in post-Wayfair?
That is a great question, and thanks so much for asking. And the answer is yes. So while economic nexus was an additional nexus law and ruling that came up in the past 2 years, physical nexus is definitely still something that states look at. So when you have those physical locations, like I said earlier, if it's your headquarters, if you have offices, if you have warehouses and remote employees, those are nexus creating activities and they're physical activities. So absolutely does come into play. All right.
Fantastic. Yeah, it doesn't look like we have any other questions, Lainey.
Okay. Well, with that, I'm just going to thank you again for your time, and we're going to stop the recording. And again, if you have any questions, give me a call, send me an email, or contact Judy, and we'll help you out.